In this video, you will learn 1. How to make your first $1,000 trading Deriv synthetic indices. I'll be teaching you in this video a simple trading strategy that I used to make my first $1,000 trading Deriv synthetic indices. And I'll be teaching it in such a way that you can also learn it quick and fast so that you can also apply it on the chart and get the same result that I got while trading this strategy and a lot of other things that I'll be teaching you guys. I will also be teaching you the blueprint that I use to do this and a lot more in this video. Now, let's get to it. The reason why a lot of traders keep failing in the market is because they always trade at the wrong place. If you are trading at the wrong place, believe me, it does not matter if you are trading liquidity, you're trading moving average, you're trading trend lines, any trading strategy. It does not matter if you have the best psychology in the market. If you are trading at the wrong place, you will still fail as a trader. This video is for traders, Deriv synthetic traders who wants to make their first $1,000 in the market. If you want to make your first $1,000 trading Deriv synthetic indices, then what I'm going to teach you is the easiest way to get to that. Now, some of you already know some basic things in the market, but in this video, I'm going to be taking everything step by step so that everyone can understand. I don't want to assume that you all are experts here or professionals. I want to teach everyone step by step. The first thing you need to understand is how the trend works. Like a lot of traders, they'll keep saying things about the trend, but they don't teach you how the trend really works. Now, when you're trading the synthetic indices, you know you're not trading other assets in the market. You are trading a very, very good, and this is the best trading asset in the market. You can confirm from anywhere. It is better than currency pairs. It is better than stocks. It is better than futures. If you are trading the real synthetic indices, you will find it easier to make money in trading than when you are trading other assets. Now, the fact that it is easier to trade does not mean that everything will just work with it. Because if you have checked, a lot of traders have entered into this trade, a lot of traders have entered into this market and thinking that it is so easy that they don't need to do any work, they don't need to put in any work, but they come back to realize that it was not so. So they think it's easier to trade, but after everything they end up disappointed. So I don't want you to just get that excitement of it is going to work out, it is going to work out. What you should do is to program yourself in a way that it will work out. The trading strategy that I'm going to teach you in this video is the best for the job if you are looking to trade Deriv synthetic indices and make a lot of money from it. Now, if you are a beginner, if this is your first time watching a video on Deriv synthetic indices, or maybe you have been hearing about Deriv synthetic indices and you want to sign up with a broker today, the link is in the description box below. The broker link is in the description box below. You can sign up with that link in the description. Now, I have taught you guys a lot of trading strategies in this channel, and I've given you guys a buffet of trading strategies, so you can pick anyone you like and start trading. And this one I'm about to teach you right now is very, very strong. Like I said, it is easy, but not because it's easy you now start trading it anyhow you like in the market. There are principles to these things. You just don't enter the market and you start trading them because they are easy. So there's a step-by-step guide that we follow to get the best out of this. Now, before you trade this strategy, you need to first of all understand how the market trend work. For example, look at this price movement here. Pay attention to the middle, the blue cross inside this crosshair. Think of it like a mouse. I'm using it to indicate things in the chart. So right now, you are in an uptrend. How do you know that you're in an uptrend? So first of all, we have this low here. See that we have a low here. Then we have a high. Then we have a higher low, and then we have a higher high. Now, literally, how it works is that it's just a trade line something. This is the first. Now I'm talking about the beginning of an uptrend. So that's the first line. This is the second, and here we have the third. Now let me make this look more artistic. I hope you enjoy my artwork. This first line here represents the first price movement. The second one is the second price movement, and the third one here, this is the one that makes everything okay. So when you have these three price movements, you are in an uptrend. If you are looking to enter a downtrend, let me show you how the downtrend works. So a downtrend, if you want to get the real price movement of a downtrend, it has three price movement too. Whether you want the big size or the small size. Currently, let's say on this chart here, we have the small price movements here. So here we have it. See this price movement here. So look at this. Here we have the high. Here we have a low. Then we have a lower high here because the market is already going down. And then here we have a lower low. Now this is what makes a downtrend. If that one is a little bit confusing, let me use the bigger price movements here. Alright, so here we have the first move. This is the second move. And then we have the third move. So there are three brothers moving on the charts. Right here we have this. This represents the high and the low. Then we have this. This is what connects the low to the lower high. And then we have this third one here. This third one is what connects the lower high to the lower low. Now when you have this is a real confirmation for a downtrend. That means the market will keep going down until there's a change, of structure. So right here you can see that before the setup becomes a downtrend, it broke this low here. Pay attention to that blue line inside this line. So look at that point where my blue line is now. It broke that low there. See, it broke the low. That is what makes it complete. If it not break the low, the trend is not yet complete. And you must make sure that this lower high is actually lower than the first high. That is why it is called a lower high. If it is not lower than the first high, then it is not a lower high. So when you have these three things complete, you know that you are in a good downtrend. Now let's go back to the first chart. So right here we have the market moving in an uptrend. So check out what happened here. For us to trade this correctly, what we want to do is to target the higher lows of an uptrend. Look at this higher low here and this higher low here. This higher low and this higher low. This is our target when we are trading this setup. So what we want is that we want the market to break out of this high here, which makes it an uptrend. Then it comes back to the higher low. and it is at that higher low that we look for our trading signal. So if the market will not touch that higher low, we are not going to trade the market there. So we need the market to touch the higher low, and when it has done that, we can now trade it. Now, for example, here we have another higher low here. So the market broke the higher high and it now came down. Then we look at how the market came down to that lower high zone. Look at it there. It makes everything so simple. For example, if you want to trade the market with liquidity and let's say order block, you will want to be drawing. Let me give you a box here. You want to be drawing some box here, trying to get the liquidity. You'll be doing a lot of acrobatics, you'll be doing a lot of drawings here, just trying to get a particular zone. But if you tell yourself that, hey, I want to trade only when the market touches the higher low, there is nothing to be afraid of, there is nothing to be confused about. So you know that all you have to do is to put your line at the low of that higher low. And when you have your line there, you are good. You don't need to adjust it, know the size of the candle and a lot of things. All you need to do is to place your line there. So right here now you can see that when the market returns to this zone here, look at this zone. What can you see there? If you have been following me for some time, you know what I can see there right now. What can I see there? What am I seeing there? I am seeing an engulfing candle. Let me draw this well. I am seeing an engulfing candle. And when I have this engulfing candle, it is time for me to trade. This strategy is not something you joke with. This is like this is like a combination of supply and demand, liquidity, order block, and a lot of them. So when you see the market touch this low, higher low here, you know that you are in for something. And because of that, you look out for an engulfing candle. When you have an engulfing candle, it is now a go ahead for you to take a trade. You see the engulfing candle there? That is the go ahead for you to take a trade. Now, this is quite simple, and I will show you another. Now, this is quite simple, and I will show you another setup right now on the charts. Alright, so here we are on volatility 101S, and you can see this same setup appearing on the charts just the way I have taught you guys. Now, here we have the market moving in an uptrend. Remember the low, the high, the higher low, and the higher high. Then another lower low. It didn't break the high there. Came down to give us the real higher low, and then it moved up higher high, lower high, higher high. So this is a complete uptrend. Now we want the market to touch our higher lows. That is for an uptrend. If you are trading an uptrend, you need a higher low, the higher lows. That's where you expect the market to get to before you trade. And when you are trading the downtrend, you do the reverse there. So here we have the market. It moved past this lower low here. It moved past this higher low here, and then it came down to this second higher low. Now the rules of this strategy is that it can give you a signal from the second one after breaking the first one. For example, when we have this first higher low, if you don't see a signal from there, you expect a signal from the second one. But if you see another signal on the third one, that means that setup is already bad and you cannot trade it. So you must make sure that it touch the latest higher low there or the previous one. But it should not go below that previous one to touch another one. Once it touches another one, you cannot take that trade. So right here you can see that we have an engulfing candle. Let me draw out a box. See that we have an engulfing candle there. So here we have the engulfing candle right after this candle. That means we can trade this. So the way we trade this is that you must make sure that you are trading immediately after you see the engulfing candle. Don't wait for the market to retrace because you might not be lucky. So when you have that, place your stop loss below this list and your take profit targets at the top there. You see that? So you buy, place your stop loss below this candle and then your take profit target at the top here. So when you do that, you already have your great signal to trade. You see, you have a great signal to trade. So this is how this strategy works. My assignment for you is to go into your charts and try to find these setups happening on the charts. You're going to see this setup a lot of times on the chart and see how it works. If you like the result, you can start trading them. For me, I am 100% sure that this trading strategy works effectively. And if you follow the same principles that I've taught you, it will also work for you because trading is all about following principles. It's all about following setups. If I tell you that it's the engulfing candle that works, don't go and trade it with a pin bar. If I tell you it's an engulfing candle that works, don't start trading it with a doji candle. Follow everything that I taught you guys. If I tell you to trade from the higher low, don't start trading it from the higher high. That is very, very wrong. So when you follow the principles that I've taught you, you will see a better result in your trading life. Now, if you are new to Deriv synthetic trading, you can register your new account with the link in the description box below. And if you are also not in our signal group, you can do that now by joining through the link in the description box. The link is going to take you through everything, and if you follow the process, you will join us in the signal group. I drop profitable trades every single day in the market, and you'll be getting this kind of trades and even better ones than the one you're seeing right now on your charts. So I will see you guys in the next one.